And we are live on Oz Property Investors. We bring the big names and we have the big fun. And there has been immense excitement about Perth. Like there's been a lot of conjecture. I've just seen it. Joe's stirred everything up. I love Joe's post. How you going anyway, Jarrad? What's happening over there in the West?
No, just enjoying life. Life's better here in the West, isn't it?
Very laconic. I'm just like
I'm very cruisy.
This is it. Yeah, just no, it's good. I like it. A bit of relaxed energy to slow me down. So how you going, Joe? What's happening?
I'm good, mate. I'm the opposite. I'm flat chat, making it happen. But maybe Jarrad's just the smart one. He's the way to system. He's got it systemized and structured, and he just uses the data to be like, well, there's a great place to buy. Just buy there. That is it. Well, I'm super pumped for this one, to be honest, Jeff, because this is going to. Jarrad, you're a data fiend. You rely heavily on data and research and analytics, and you've come to the right place. You've sat in the right seat here, and we're lucky to have you because you're a big data freak when it comes to Perth, and you've lived there a very, very long time. And the thing with Perth is it's so far away from the east. I was having a look. It's actually further from London to Moscow than it is Sydney.
Is it Moscow? Is it Moscow?
Moscow. Tomato.
Yeah, that surprised me. We do feel pretty isolated over here.
You're very far away, but there's still a great opportunity for investing in there. And I think this is the perfect opportunity to get you on and show us the ropes and give us, I guess, just starting fundamentally. That's what I'm keen to hear about. What are the fundamentals? What's the data that's backing up your decisions? And anyway, how are you, Jeff, mate? How are you? You're looking suited and booted.
Yeah, suited and booted. You know, Joe's excited. Sorry, yeah.
You got dressed up for me, Jeff.
Oh, yes. I dress like this. No, but I know Joe's excited for a session when, like, the amount of time that he spends. Oh, and I'm not going to say that because the people who are watching now are going to think, crap, if I haven't spent much time in insurance. I'm going well. I had a long trip, but I feel the energy is pumping through our veins today. It must be the energy over there in the WA market. So if there's any questions, people, drop a comment, smash the like button on YouTube or Facebook when you're watching later on, because the more people that do that, we want a whole bunch of people to get this information, and that way they can sort of feel more informed when making decisions about their property investing. So that's what we're all about. So I'm going well, Joe. Let's shall we get into the quote of the week?
Get on.
Yep. Do you want to go first, Jarrad? I guess should go first.
Really? You giving me the honors?
Yep. You have the honors. I can go first.
My quote is, try not to become a person of success, but rather try to become a person of value.
And that's by
I just love
Mr. Einstein, isn't it?
But isn't that the same thing?
Einstein.
Like if you become a person of value, I mean, that was one of the big things I learned from that book. What's that book? Think and Grow Rich. The whole point of that book is add value to others, and you will be given value to to the same amount of value that you provide. So
exactly.
I kind of say it's the same thing. Do you not?
I think by being valuable to others, you will automatically become a success. But there's a lot of people that try and just chase the ego and, don't really come from a place of service.
Yeah.
So, they just go for the low-hanging fruit. Yeah. What about you, Jeff? What's your quote of the week, mate?
I also chose another scientist, and also about value. So the value of an idea lies in using it by Mr. Edison. So Edison was that bloke. Didn't he try and do 1,000 inventions and invented, like, most of them failed, but then there was the
light bulb, wasn't it?
Yeah, the light bulb guy.
Yeah.
But yeah, he just did so many things and actually was just doing things constantly. And that's where he was able to add value and create that. So an idea is fantastic, but actually executing on the data, on the information, because you can research till the cows come home. But if you can't execute or take that idea, then it's only as good as it's not as good if you don't implement it. So that's my quote.
Pretty sure he created world's first recorded sound as well on the gramophone and created that whole thing.
We'd be probably talking in the dark tonight.
Have our cups with their strings, their long strings.
Yeah, I don't think there'd be one long enough. I've got a little quote. It's very basic. The only time you fail is when you fall down and stay down. I like that quote.
Is it a scientist show?
It's not a scientist, no, some author. But it's so true. Like this is one of the things that I speak to a lot of people about, investors. And they get to a point like, oh, finance is really hard to get right now, and I can't be bothered filling in the paperwork. And I'm like, no, you've got to keep pushing forward. Yes, it sucks. It sucks getting your loan, and then you have it for 3 months and you don't buy a property. Now you have to do the full revaluation and reevaluation and all of that stuff. But I always like to say it's at this point that someone's given up. So I'm going to keep pushing forward because now I've got less competition. And then I get to another hard point. It's at this point, someone's given up, but I'm not going to give up. And you just keep pushing and pushing and pushing until you get the end result of whatever you want to get. So that's my little...
Probably in part why 90% of property investors get stuck at 2 properties. They just don't push beyond those hurdles that come up.
Yeah. It's really interesting. Yeah, I'm reading McKnight's latest book, and he's all about talk about the magnet, so the attraction and just sort of if you Anyway, we'll talk. We could talk about that all night, but let's get into Perth because we are here to talk about Perth. So I'm excited. Let's do it. Shall we?
Well, that's it. Let's do it. There's nothing worse than going into a situation unprepared, especially when that situation is purchasing one of the most expensive assets of your life against a trained property expert in the form of a real estate agent. It's a scary thought, but it is a skill that can be taught. Do you want to learn how to become fully prepared when buying a property so you can get out there, buy your dream home or investment property without the fear of actually messing it up? Scott Agate, the founder and expert property negotiator at Hello House, has been helping people buy their properties by stepping in and negotiating with the agents and saving his clients tens of thousands and in some cases hundreds of thousands of dollars. Scott has now decided to share all that he's learned over the past 28 years in real estate so you can go out there and do the exact same thing on how to find a property, analyze that property, negotiate on that property, and transact on it to get the best results. He's created the Get Buyer Ready course, which is a step-by-step guide on how you too can become an expert property negotiator. It's the easy way of how you can avoid all of these agent games and get the best purchase price on that dream home or your investment property. The course is in short bites for busy people with no fluff at all. Just all the information you need to get buyer ready and secure that next property with confidence at the best price. Scott has been kind enough to give our community a massive discount with the link below. Sign up today before you even think about putting an offer on that next property, and it will be one of the best decisions you ever make.
There you go. So I saw David Oliver's in the comment. I thought David was west, but he's saying he's in the east. So David is a regular viewer, and I believe has a couple of. He talks about Perth quite regularly. He loves it. But Jarrad, the man of the hour, Jarrad Mahon. Who is this this mysterious Perth investor? Well, not mysterious. You've run a podcast that has recently just done its 100th episode. So. But the thing I think that's interesting about you is you come from an engineering background and you bought your first property in 2005. We will hear about that. And you've built up Investor's Edge since 2008. And you're one of Australia's most award-winning property management businesses. And it's no surprise given that you look at 200 plus Perth suburbs. Didn't even know there was 200 Perth suburbs. And you're an author, you're a podcaster. And the other cool thing is you give back, you add value as well. You look at things like charities such as Smith Family, Zero to Hero, and you've been the 2016 top 100 influential business people and 2014 40 under 40. So, geez, is there anything? When do you sleep, Jarrad? How do you do all this stuff? Need some tips.
Yeah, just love what I do, so it doesn't feel like work, does it?
Yeah. Very humble as well. I must just say, because it is as somebody who attempts to really put out heaps of content, it's tough to keep backing up year after year. So you've been doing it since I got out of high school 2007. So you've been a property manager for almost as long, and I'm in my mid 30s now. So you must have been managing properties once you got straight out of high school. Like, good on you.
Not quite.
Not quite. All right, cool. Let's the question we love asking investors first up is, and I've heard the story, but I'm sure there's something that we'll hear here, is what is your first investment? And tell us also about what got you into property investing.
Well, when I was 16, family friend gave me Rich Dad, Poor Dad. which I know started a lot of people's journeys.
Yep.
And just reading that, I related more to the poor dad in the story because he was my dad. And, it was great to see that there is another path and you don't have to rely on your book smarts and that anyone can sort of become wealthy. So that lit a real fire in me and a burning desire to go about trying to figure out and find how to go about creating wealth. So that was the start of the journey.
Yeah, that's awesome. Yeah, such a great book. I feel like I need to reread it again. It's been so long.
Yeah.
It's just great little stories of connecting, building upon each other to be financially secure. It's not really the how-to book, but it's more of a great framework and mindset book to get you set up and rolling on the financial freedom path. So what actually got you into property? Like, what was your first investment property and what did that look like? And how'd you get into it?
Well, from the age of 16, I used to go to the public libraries and stuff and read all the investing books I could get my hand on. You mentioned Steve McKnight's book, and there was, there wasn't as many books or resources in those days. You couldn't listen to podcasts or, a webinar that we're tuning into. So I just soak up anything I can get my hands on. And I really like the idea of leverage that you can get with property. So I started sort of playing around with shares and thought, geez, it's going to take me forever with the amount of money I've got to try to grow that out with shares. And I also didn't have much money myself. Only at 22, I got my first engineering job. So I thought now's the time for me to get into property investment. And I wrote a little business plan from all the things that I'd learned. And it was basically to find a property under market value and do a renovation and look at selling it on completion. So I took this little business plan around to my next door neighbours because I was still living at home, knew the neighbours pretty well, and I dropped a few copies off to various neighbours. And one of them came back to me and said, Jarrad, I'd like to be your money partner and I'm willing to chuck the money in and go 50-50 with you. And I told my parents, all excited, I've got some money to do my first deal. And they said, what the hell have you got in this business plan? Show me what is in there.
They have FOMO, do they?
Yeah, well, no, they were just worried about what I was promising. But they ended up reading it and saying, wow, you have actually been doing a lot of learning about property investment and we like what you've put together. And they'd never done any investing themselves and said, how about we be your 50-50 money partner? And that was the start of our little partnership together. So I dropped my brother off I sort of chose Suburbs based on affordability because we didn't actually have that much, borrowing capacity or equity to use. And I dropped he would have been 15, 16 at the time, dropped him off in the suburb and said, if you see a real shit house, put one of these flyers in the mailbox and I'll come pick you back up in a couple of hours. And I was paying him, a bit of pocket money to do it. But I obviously believed in leverage from a pretty early age as well. I didn't want to be, going around the suburb myself. So, so I had
playing game boy.
A couple of people call me and one of them had already left the state and they're like, oh, I see you want to buy my house and you've got your cashed up and you're ready to go. And I want to save on, not using an agent, all the things I'd sort of written in my flyer. It was really basic, my ink cartridge printer.
I remember those.
So, that's how I put a spreadsheet together as us engineers do. And I worked back from the renovated selling price in the area and calculated in the cost of the reno and put my profit margin in there and came up with an offer, which I remember was 189,000. So that was in Huntingdale, which is one of our Perth suburbs. I think a lot of investors are actually buying in there now, funnily enough. So it's still very affordable.
Back in the day, 185. Yeah. Good to go.
So the bank valued it at 240 on settlement, which is pretty cool. And
pre-reno.
Yeah, pre-reno, yeah. And then we spent about $32,000, did everything and worked the long nights and the weekends and worked out all the things that you don't want to do ever again, like scraping these vinyl tiles off the floor that were just so glued down that
probably asbestos.
Oh yeah, probably. Let's hope. I was wearing the appropriate mask and stuff, but God, it was tough work. So anyway, I had my brothers there helping and paid them a bit of an hourly rate as well. It was all tallied up, and they got little payments at the end when we ended up refinancing that one instead of selling, and it was valued at $320 at the end of the reno. So that was pretty cool.
Wow.
And
really?
We rented it for $350. So it was a good little.
Back in 2005 or 2006.
Yeah. 2005, 2006, yeah.
That's insane because I'm just looking. I whenever people mention suburbs, I like to go and do a bit of googling. But I'm looking at June 2019 and sort of June 2019, and the median house price of Huntingdale was $348,750.
Yeah. I've continued to check in on. I like that. Yeah, use child labour. Yeah.
Oh no.
Tip number one. We're already getting value.
See, I said I'd deliver value. So
that's an
Jeff,
epic return.
do you ever check in on properties you've sold since selling them and wonder, how did I do getting out?
Only the ones that I know that haven't performed that well. The development deal. Well, actually, yeah, I looked at one that I knew had probably done pretty well the other day, and I've done a couple of joint ventures. Yeah, the two joint ventures I've done, I would have loved to have kept both of those because they were in reasonable areas. The one that, so I try not to look at those too much because
and that's the downside of doing a joint venture because you need to have alignment to keep the property, and that can easily change. So.
Was there a way that you could, we won't get too far down this rabbit hole, but I'm curious, was there a way you could have kept that property by refinancing out? So we
did refinance it and moved into doing some other similar projects, and we got our little renovation formula down and, used the same paint color and the same tiles and the same, virtually everything. So me and my parents did, I think, 3 in a row over a couple of years.
Did you hold? Do you still hold Huntingdale then, or you ended up selling it?
No, we sold that later. Yep.
Fair enough. Yeah. Wow.
Yeah.
What a
good learning experience.
Yeah, absolutely cracker. Like that's awesome. That you were so. What do you think it kind of motivated you to do that? Like, what made you go around to people's houses, create letterbox drops, and do the investing thing?
I think when I was growing up, you have those little experiences that stay with you, and I just remember getting told by my parents all the time, money doesn't grow on trees, and we're not made of money, and those things. I've actually had to work really hard to get over that psychology because it really starts to limit you the further you get on. So when I couldn't I used to have school uniforms from the secondhand shop and stuff like that. So just all those experiences made me want to go out and improve my life and try to give my kids a better life than I had. But of course, we don't want to spoil them too much, do we, Jeff?
No, yeah. It's interesting. You sort of, I was reading some things about that, and you sort of say, even listen to some podcasts, and they sort of just say that whilst it's good to give some. It's then sort of about almost turning into mini entrepreneurs and saying, well, what's the business plan if you want X? And so I mean, it's
exactly like what your parents have done with you, right?
What was that mean?
Like exactly what happened with Jarrad. His parents didn't give him a handout; they weren't giving him free money. Hand up. I think that's super important.
We could just do a whole dive on that, but should we get into Perth though? We have talked.
Well, that's the thing. I want to get into Perth. Now, I guess I want to kind of frame the conversation because I think it's very important. We live over here in our wonderful eastern states and it seems awesome. But Perth doesn't really exist. It should be its own island, and I'm sure Perth wants it to be its own island, but it's not. It's connected to Australia.
Yeah, it wants to be its own country.
Its own country does it, Jesus. So I think it would be really good just to
you guys up with our resources.
Yeah, exactly. We wouldn't do much without it. But it would be great to just give some fundamental understandings of the Perth market. We've got a whole heap of data here as well, but it would just be kind of talk to us as if we're first-time investors. And I was in Perth, a couple of months back actually, and I do some buying down in Perth. Well, not down in West. So it'd be great to just hear, because we've pop in the comments. Are you a Perth fanatic? Do you buy a lot of properties in Perth? Are you brand new to Perth? Maybe that's a good question. What is the best way to frame this for you guys so we can get the most out of it? But we've got a bit of data, so let's jump into it. Yeah.
So let's go click the button. Or is that me?
No. Okay.
Here we go.
Oh, hang on. Let's get rid of our little heads.
Okay.
The Perth property clock. Okay. This is over to you, Jarrad.
Yeah, it's worth just understanding where all the cycles are at in Australia, and I love, this is Heron Todd White's property clock, and they publish it monthly. And
very controversial, Heron Todd White. What do you? Because I often see, sometimes you see a city that's in a rising next month that's right at the bottom. I'm like, or it's at the starting to decline. How do they? How do they figure this out? What's their metrics?
We'll take it with a grain of salt, but they, they've got their own methodology, and they are valuers in each of the states as well. And
too close.
So, yeah, you can see Perth's around in a rising market now, and you look at the other sort of options that are within there for where to start timing things to buy value. And
I don't know how they're saying. Sorry, Hobart approaching the peak of the market. What are they talking about? Hobart has been declining for a little bit now. Anyway,
yeah, you'd think that would be around more with Sydney, and I would think Brisbane's more starting to decline, not around in declining market. And I think, where's Melbourne on this? You can zoom it out a bit more. I think
sorry.
I don't even have Melbourne.
Melbourne doesn't matter.
Sorry, Melbourne.
Come on.
They're at Melbourne Southern, apparently.
Southern.
Whatever. They're starting to decline. Okay. I think it's
I think we'd all agree that Sydney and Melbourne are coming off when we look at them from the macro top level.
Yep.
And
back to Perth, sorry. Yep.
Yeah, back to Perth. So we're definitely still in a rising market, and we can run into all the fundamental reasons why that's the case. But you have to, if you're a starting out investor, and if you do want to sort of accelerate your building of your portfolio, it certainly helps to buy with the right timing and to try to get that equity gain within the first year or two. So for me, when I'm looking, and I'm biased, guys, I must admit, that when I'm looking for where to put my money now and wanting that, more shorter term gain, Perth to me represents the best value of the rising markets that are still, to come around.
So I guess one of the things that comes up a lot about Perth is, 10 years ago, maybe not 10, maybe just 11 years, the prices of what have only just caught up to where they were 10 years ago. So we've been in a very, very declining market for quite a long time. Yeah. So it's a bit of a challenging one for people to say, how is it going to continue to grow? Where's the growth aspect of this?
Well, it's worth sliding on and comparing exactly where we're at for median house price. Let's go down past units. The unit market typically trails the housing market by 12 to 18 months. So let's chat about where Perth's at relative to the other capitals. We're at 559,000 median value.
Yeah.
And you can see that Adelaide surged recently, Brisbane before that, Melbourne and Sydney before that. And Perth hasn't really had its catching up yet. Over the last, year, we've done 4%, but and this is just at the median level too. So in any capital city, including Perth, when you go deeper, there'll be suburbs that are doing 15, 20% at any one time. There'll be some suburbs that are going backwards. So this is just at the median level. Now, the reason that we've been pretty down for so long, and you can't say, oh, because the last 10 years has been that way, the next 10 are going to be that way. I'd actually throw that back at people and say, because the last 10 years has been pretty down, it's even more likely that the next 10 years is going to be stronger, because when you're a migrant looking to come into Australia, or when you're a property investor looking for stronger yields and value, they're the strong reasons that are seeing a lot more buyers flock to Perth at the moment. And there's this concept in maths called mean reversion. I don't know if you guys have heard of that, where if something has underperformed for a period, it'll always kind of revert back to the mean. And
probably say may revert, because
exactly.
Well, one thing for me is just the population of Adelaide, for instance. We've moved total return 20% here, $650,000. Western Australia has a population of 2.84 million people. South Australia has 1.7 million people. So there is a million people difference between the two states. And there is a $100,000 difference in purchase price as well.
Yeah,
I find that incredibly interesting itself.
Should we put up our financial advice slide, Joe?
You're going to throw in a disclaimer now, Jeff. You're feeling it, are you?
We can pop that up at some stage.
I think one of the keys that drive any market, even though it's good to have population growth and jobs and all these things like underpinning an economy, which are essential, because otherwise there isn't going to be that ongoing demand. But the final ingredient that needs to go on the top of that is confidence. And with Perth, because we're coming off of that downer period, it's taking us a long time to get that confidence back. Whereas over East, Sydney, Melbourne, there's almost an expectation that it's just going to continually grow. And it's funny when people look at Perth and say, oh, it's, that I wouldn't invest there and this and that. I look at Sydney and Melbourne and think, gee, how high is that, median house price? Like, can anyone even afford to live there? Like, is that sustainable? Like, this is the perspective.
It's interesting. It's interesting you say that, because I sort of like it when you actually grow up in the environment, it's just the price that you pay. You just think, oh, well, it's if I'm going to buy a house, I'm going to be paying $1 million. Or I suppose when I was growing up, it was like 400,000, 500,000, 600,000. Like, that's going to be the price that I'll pay for a property. Otherwise, I won't buy a house. So, but the interesting thing though is back in 2008, or correct me if I'm wrong here, around 2008, 2007 or 8, Perth was actually as expensive as Sydney.
Yeah. So the second highest.
Yeah, it was got pretty close.
And nearly went to overtaking Sydney. So
yeah. So another thing, there was the big sort of mining boom that sustained that for a little bit. What do you we're sort of jumping off course a little bit here. So what do you say when people sort of throw the objection out there that it's a very sort of mining heavy market? There's not it relies too heavily on that. How do you sort of answer that question when people ask that?
Well, I'd say that it does, and there's no getting away from that. But the reality is that we need mining and resources to prop up the whole country. And I think that that's the thing that's actually going to insulate us over the next 2, 3, 5 years, when all of the economies need to get going around the world again, when they're starting their war machines to ramp up, defenses, and God knows what else is going to happen in with Russia and over there. Like, the need for resources is only going to remain. Like, yes, it fluctuates and it goes up and down, but I think that's also what has insulated us and protects us too. So
Has Perth diversified a little bit more? So like the massive, when was the mining boom? What was that? When did they kind of pin that? What were the kind of years across those?
There's a good slide that is comparing the long-term growth. If you can find that one,
Yeah.
it's a few slides.
Well, one thing I'd like to mention is so I was doing a bit of comparison with WA and WA and South Australia, because mining this is the kind of amount of money that's coming from this state. We've got $687 billion coming from Western Australia. That is made up of 29% mining, manufacturing, construction. These numbers, I don't have the previous numbers, so it would be really interesting to go back with data at the exact same chart to be able to see what this was 10 years ago, to see how heavy it has, because I believed that we have diversified a little bit more. Mining has manufacturing, constructions, and real estate has increased more so than mining. So it may have been 35% mining, but I don't have that data. But one thing is you want a diversified economy. And yes, it is very mining heavy over there in WA. But if you look at South Australia, manufacturing makes up 20% of the economy, and it only brings in $245 billion, as opposed to Western Australia's $687 billion. So these are just little things that I kind of look for and look out at as little interesting points to be aware of when a property market is $100,000 less than another market.
Yeah.
Where am I going?
Good chart. Yeah, to this one here. So we can see here the decades, and where over the last decade, Perth's only sort of done 14% in overall growth between 2012 and 22.
Yep.
And then you can jump down to the other capitals and just see in the orange bars down the bottom there just how much, Adelaide, Brisbane, Melbourne, Sydney have all gone over that same decade, with Perth this tiny little orange bar at 14%. But if you look at the bar below that,
2002 to 2012,
104% we did, and we grew the most of any capital. So you can't expect that growth, that crazy level of growth in that decade, to continue at that rate. And that's why we've had such a pullback for a while.
And even if you look at the decade before, so 1992 to 2002, you were top three as well. Whereas you look at the ACT and Hobart, like Hobart was sort of
a lot more evenly distributed then, wasn't it?
Yeah. So it's just interesting looking at that, isn't it?
Yeah. So when I look at these 30-year average annual growth rates, and that's what these are on the left-hand side. We've got Sydney's performed at 5.8% average annual growth rate over 30 years. Melbourne 5.9. That's done the best. Brisbane 5.1. Adelaide 5.2. And Perth 4.8. So we're not like that far off over 30 years still in the average annual growth rate. But 1% does make a big difference. And what I like to sort of point out as well is that it'll be a fairer comparison in another 5 years when we've had our upswing, because all the others have had their upswing in this cycle. We haven't yet completed our cycle from what I can see, and I believe it's still ahead. And that would then be a fair comparison of then comparing the average annual growth rates after we've had our catch up, which I think is still ahead.
I tell you that those 30-year numbers are quite interesting, aren't they? Because you sort of say that, so you hear people say, "Oh, your property can sort of grow at 8%," but looking at those, and I think that's what 1992 to 2022 is it? Yeah. So you're not picking any, you're not cherry picking any data. That's literally just the last 30 years, which I think is very. There's a lot of integrity there, that you're not just sort of saying, like, you're not picking because obviously you could go and you could pick 20 years and Perth would look fantastic over that 20-year period, but you've actually kind of, I really that's really interesting data.
Well, I think just this little chart here, which we've shown before, gives us a good insight into the property markets as they've gone over time. So this is Australian capital city house prices. And if you are on the podcast, I apologize. This is going to be a very chart heavy focus. So jump on the YouTube and subscribe there. But this is from 1970 to 2020, non-inflation adjusted dollars of what property prices were doing. So we can just start the chart and then it just literally goes. And we can start to see that Sydney has its boom. Melbourne starts to boom off. Brisbane starting to catch up. Adelaide, Hobart, Perth are slowing down.
Yeah, this is really cool, man.
Yeah. I'll just zoom in a little bit. And then Perth
Yeah, look
starts
at
to
Perth
really...
go. Even in the...
What year are we in? 1976 we are.
Awesome.
Oh, Perth's... I think Perth's going to go... Oh, no. I don't think it's going to catch Sydney. Sorry.
Sydney's taking the tear.
This is like a race, isn't it?
Isn't it? Yeah. Yeah.
Well,
like Perth is... Oh, God, he's done it again. Canberra's...
Can you believe Canberra was the second highest there?
1980.
It doesn't surprise me because... I think Canberra actually takes over.
Yep.
It did.
Hobart's tearing up the inside.
And Melbourne, yeah. And see, Perth and Hobart. See, Darwin's performed...
And that's interesting because back in 1986, Perth was the lowest price capital again a few years.
Yeah, wow.
Okay.
Yep. So
yeah, okay.
They all jostle for position, don't they? And it's no one...
I think Adelaide just loves staying middle of the pack. I don't ever really. I mean, now I say that, it's going to go right to the bottom. but yeah.
But we're not much between each other either. Like, we've got 100, 107, 102. There's not really
percentage-wise, though.
Yeah.
Like it's all...
Canberra's tearing off.
Yeah. I wouldn't surprise me if when the late... I mean, it shouldn't be about politics, but watch Canberra drop off a little bit when Labor... Oh, you should fast forward a little bit, Joe.
Yeah, fast forward to 2000.
Yeah.
Just to kind of speed this up because...
Yeah.
Everyone's
good, don't get me wrong, but...
I didn't realise we were going to watch a grapple night, guys.
Watching it.
Yeah, here's where Perth actually roots away.
Here's Perth's comeback.
Tear up, 2006.
We'll stop it after the Perth. Yeah, so I think it's around the 2010 that it was almost as expensive as Sydney. Not quite 2010.
And then what happened?
No.
Then we had a thing called the GF something.
Yeah.
Oh, dear.
It was 2008 where it was nearly as... Yeah. You've probably seen enough, Joe.
Well, it's still third. Oh, no, now we're down.
And Darwin as well. Like Darwin was... What was going on in Darwin? Why was Darwin so expensive? It's
just amazing how different the tearaway has been over the last...
Sydney's been
this is only a decade.
Yeah.
Top for the last 20 or 30, yeah. As Mike Larry says. Sydney is... No.
And there you go.
There you go.
Just look how affordable we are down the bottom there.
Yeah. Not sure if... Was that... Yeah, we should get back to the chart. Should we reckon the chart, Joe? Because back on point.
Get back on point. Okay.
Well, it's worth also comparing the rental yields that you can get among the different capitals as well. And it's especially important now when interest rates are going up and it really helps to have a stronger rent to offset that. And we're doing pretty well in Perth here at 4.6% rental yield. I think Sydney and Melbourne at more 3%. So
I think the beauty of having somebody like yourself as a property manager, you could actually identify where there's opportunities within properties as well. It's not simply about, yes, that's the average, but you could actually, you've got a whole bunch of data and analysis, which we are going to go into, which is what a lot, and I think that's where, yes, 4.6 is a thing, but I'm seeing a lot out there. There's suburbs out there that have got 5.5%, but maybe that 5.5% suburb is not necessarily the one you want to go for. That's where somebody like the boots on the ground, somebody like Jarrad can identify and tell you.
For sure.
Okay. Cool. Okay. So this,
the other factor to note in the slide before that, this one, is that and you can see this playing out across Adelaide still, as well as Perth. What's actually happening here is this is the change over the last 3 months, and you can see the lower quartile of prices is, showing that it's increased by 1% over the last 3 months, and in Adelaide it's still going a lot harder at 3.1%. And so what's actually happening is the growth and demand is shifting towards affordability in each capital. So does that make sense, guys?
Yeah. And this is kind of what I'm seeing on the ground for South Australia.
Yeah.
Where the bottom end is, you're starting to max out these high, exactly this, right? Like in the cities, it's very challenging, but South Australia is still tearing on a nice little tear.
And that's why you can't just look at the overall median and see, it's changed, whatever it was, 0.4% in 3 months, or in the last year. It really is so suburb dependent and property specific, and that's why you can be getting growth when it appears at the median price level that not much is happening.
Yeah, and this is the challenge people get in when they say, I'm just going to. I see that South Australia is going down. Well, some parts are, but not all of it. Australian property prices are going down. Well, in some parts of it there is, but there are parts that do go up as well.
Yeah.
But the fundamentals. This is the area that I wanted to chat to about. Is again for some of the newer people is to chat to some of these fundamentals. So let's do that. What have we got here? Inflation.
Yeah, this is just a bit of a graph around inflation, and it shows that, because this is really driving a lot of things at the moment. And I found it interesting that Perth actually had one of the lowest inflations of each of the capitals, and that translates out to being more affordable to live here for the average basket of goods and services that are sampled in the CPI. And that's why the Reserve Bank's going so hard at trying to raise interest rates and soften demand and pull us back into this target 2 to 3% range. And from chatting to buyers on the ground here, what I'm finding is every time there's an interest rate rise, there's still so much uncertainty, and that is one of the largest reasons that's holding back confidence. And I don't know if are you seeing that with the buyers you chat to as well, Joe? Or
I'm seeing a little bit of confidence across the board where people are like, is investing now the best time? But also I'm starting to see people get hit with interest rate finances. Hey, I can borrow 450,000. Let's have a chat next month. Okay, great. Just spoke to my broker. I can only borrow 400 now, or 420, or whatever the number is. So they are actually, in real terms, when interest rates do rise, it does also affect your borrowing ability. So, if you can borrow,
depending on the situation, you can be priced out of the market by rising interest rates, and you not be able to save as quick as the rates can take out your borrowing capacity. So, but look, we are starting to see that level out now, and it's worth going to the next slide and actually getting some perspective on interest rates, because here's our target cash rate going back in time to 1990, and you can see that we're still so relatively low compared to where we've been at. And it seems to have sort of hovered at this 5.5% mark, and we've been very low from 2012 onwards. So we're really still getting used to getting what is normal and getting, we probably won't go back there because people's overall borrowing and other factors are probably a fair bit higher, and they're more sensitive to rates, and it's looking like the RBA is starting to put the brakes on and slow the rises, and I think what's going to happen is once interest rates cap out and the whole market's confident that they've leveled out and they're stable, I think that's when you're going to see a lot more investors enter the market with more confidence. And I'm not just talking Perth, I'm talking across the board. And I feel like we've got this window where, if we get in and go forth and push through that, like we were talking about at the start of the webinar about, coming up against hurdles. So this is one of them. And I think if you push through, you can be rewarded.
Yeah, I think a lot of people say the best time to buy is when your financial situation allows. And while I certainly tend to agree, I think as well, if you can somehow marry that up with when there's a little bit of fear in the market and a fundamentally good area and a fundamentally good property, if you can marry up those, of course, it's never going to line up perfectly. But I think if you can do that, that's where you really can potentially see outsized returns. Yes, there is risk in that. So because otherwise, with greater risk may equal greater return. So I think that's kind of where, and particularly, so that's sort of, I tend to think we'll sort of see interest rates, the implied yield is that the cash rate will level out mid 2023, but I mean, who knows? Inflation will largely dictate that.
So, look, this is the backdrop for what is affecting overall investors' confidence, and we can see that when we look at the investor lending by state, which is interesting as well. There's another slide that you might be able to bring up. Which shows the most current data which we have, which is to August. And you can see big pullbacks in Sydney, in New South Wales, Victoria, Queensland. They're all pulling back heavily. Investors have run for cover in all of those markets, and that's only going to continue to get worse. And you can see that we're holding up pretty well in Perth. We're sort of started trending sideways, if not a little tick up, and then and Queensland is coming off, and South Australia is sort of gradually decreasing. So I think what I've seen in the past anyway is this is like an early indicator when we can start to see that more and more people are coming in, and I think we're going to maintain our level until we get to the other side of rates capping, and then I expect that we'll see more investor lending increasing, because it'll be where investors going to go when they're getting out of Sydney, Melbourne, Brisbane, and then they'll be getting out of Adelaide. I think
Joe, how do you feel about that, man? You're not emotional about it anyway, Joe. Although you're the mayor of Adelaide.
No, I mean, I'm not the mayor of Adelaide. No, I do a little buying in there, but I buy in every other state as well, except for Tasmania at the moment and Darwin. So no, as soon as the data tells me to get out of a market as it gets priced out, then you just move on. That's the way you should invest. But it's interesting to see these three markets are very interlinked with each other. And this market, what's this, South Australia and Perth are interlinked quite a lot as well. But it's interesting that these three kicked off so much, and these ones just didn't feel the burn, feel the good.
It's probably also the value of the properties as well, Joe.
Lending by billions.
It's not units, it's total billions. Okay. Have you got a chart by like how many investors were there? That would be amazing.
No, I don't.
No, it's fair enough.
ABS's fault.
ABS. They'll have it somewhere. Okay, what are we looking at here? First home buyer lending.
Yeah, we can skip over that one. Like, that's going to decrease in the majority of states. This next slide's really worth chatting about.
Highlights of the economy.
Yeah. So I like to, look through to what is the fundamentals, and unemployment is a really important one. And we've got the second lowest across all the states at the moment at 3.4. We've sort of been bouncing between 3.2 and 3.4. And that's really going to underpin jobs, job seekers coming to Perth, migrating here to get a job. And then when we combine that with the average weekly earnings is the highest of all states. So we've actually got a far greater, weekly pay packet to be able to afford rental increases and higher house prices. And you look at, I've seen some other interesting stats from Michael Matusik come out as well that mentioned, what sort of percent is the average, household's loan interest compared to wages. And, Perth in that was really low too compared to Sydney and Melbourne. So just the ability to afford and the ability to get jobs is one of the biggest things that's underpinning our capital at the moment.
So can I, and we might get into this later, but can I ask, is there a large variance between various suburbs around Perth, or is it somewhat spread out in or equal?
No, everyone's got a job here. Anyone that wants a job has probably got a job,
Except for 3.4% of them.
Yeah.
In terms of the suburbs, though, because obviously around the sort of, I'll throw out Sydney because I know Sydney probably the best, but in the eastern suburbs, like I'd imagine the average weekly income in those would be probably a little bit more, maybe a lot more than somewhere like a more, not to disparage it, but a western, like parts of Western Sydney, which are going to have a slightly lower weekly. Is that sort of similar in WA? I imagine there'd be, or is it more evenly distributed?
No, it's definitely not evenly distributed. Like the western suburbs here have the affluent because we've got the beach on one side, the river on the other, and close to the city, and everything's sort of 10 minutes away.
Is that your Subiacos, your Esperances? Is Esperance?
Yeah, Subiacos in there. Wembley, you go out to Cottesloe, you've got Peppermint Grove, Dalkeith, Netherlands, Wembley, Churchlands. So.
Because that's one of the things, right? So with Sydney, what makes Sydney so great is that it's got the ocean on one side, and then it's got the Blue Mountains and national parks. So everything's kind of hemmed in, and then you've got this fixed area for where supply and demand can do its thing, where it's going to get pushed in. So what do you have to do? You have to go up and go into high rises and units and those type of things. So I guess that's a question that what someone asked before was, how does it kind of work with Perth? Because there's all this land over here, a massive land supply, and all the coast along here as well. So you can kind of go on for eternity.
Look, we've got a big problem with sprawl. There's no doubt. The government has to keep providing services the further up and inwards we go. And that's why suburb selection is so important. And it does scare me when I see we've got a lot of investors that come to us for property management after they've bought their properties, of course. So they don't ask us, whether it's a good investment. They buy them. In most cases, bring them to us for management. So many of them ask then, what do I think of this suburb? And it's often best not to comment because I've seen in the past, 14 odd years, having been through the cycles, the bottom's really fallen out of these areas that have the land supply that'll just keep going on for the next decade. And I've listed some of these suburbs towards the end of our webinar tonight, the no-go areas to avoid, because they seem to be attracting a lot of investors at the moment. And that's where we're getting a lot of new managements. But if you ask me, I would be like, no, do not go in there.
That's where I think there's so much value in the service, because not a lot of property managers, I mean, I don't know the statistics, but not a lot would be substantial property investors themselves. So that's where I think you're very unique and your investor's edge. So yeah, it's all in the name.
Well, I thought it would be worthwhile bringing this one up as well. To kind of show what I was talking about there, where
What's
it is nothing
multiplier.
So this is is it REWA?
Median house price over
map.
Perth, and you can see the red is the highest prices, and that's the western suburbs. And we call that the golden triangle.
So, I've heard of the golden triangle. Yeah.
As you go north and south coastal, people love living on the coast here too. It's the lifestyle, and it's the what we all love. And the freeway runs north and south too. So when you're west of the freeway, that's more premium than being east of the freeway. That the freeway runs north-south, if you picture that.
What's the route? So I can see some yellow out in the east. You're sort of close to the John.
Yeah.
What's the
So
reason
up
for
in the
those
hills,
areas?
you do have some really nice views and some really lovely, decent school zones, and it's a lot more relaxed and semi-rural life, so it's a good place to raise kids.
Yeah. So from the sounds of it, though, people will be buying that more of. It wouldn't necessarily be. It would be more of an emotional owner rock, and not necessarily there's potential for that to be land subdivided in those areas potentially.
No, because there's no sewer to a lot of the areas. That's held back subdivision as well in the hills.
Interesting.
And
there's no sewer. What have they got?
They're on septic tanks, most of them. So the town centres are sewered, but then a lot of the others the majority others are septic tank. Yeah.
There you go.
But one thing to note is that this is similar to, what a Sydney looks like, because even if Sydney could expand out even further and further and further, people still want to live to the ocean. They still want to live near the river, and this is built up. Like if you go to these places, there's no more land supply here for you to jump in and build a development, because there's just no space. So yes, there is all this land supply that's going to allow you to get into a place, but people there's still desirability in living on the ocean. But the other thing is, I can have the ocean up here in Eglinton. And
you've also got a lot of land supply up there in
there'd be some scary sort of stories like
30+% drops. It would have been like I was praising some of our clients up there, and it was brutal. So interesting. And then when you go further south of we've got Fremantle, that is a bit of a hub south of Perth, and you go down, we've got Rockingham, which is this other area. So Rockingham is a lot more affordable coastal, and we've got Mandurah south of Rockingham, which I may or may not have. I didn't include it on the map. It's very far, but a lot of the investor activity has been focused around this Rockingham area.
And why is that?
Because it's been affordable with a strong yield, and I think they've been chasing the coast as well as the little sort of basic recipe that a lot of investors follow, and it's almost like a self-fulfilling prophecy. Once someone points it out, then the rest get in, and a lot of people have been buying. And see Baldivis that's next to it, like. A lot of investors are buying in there at the moment, and that has land supply for decades.
Yeah, you can just see it on the map. Look at all that vacancy. That scares me a lot, because you're not even close to the and there's land. Like where's the scarcity of the asset?
No. So that's one of my no-go suburbs, to spoil things.
Yeah. But this side of the highway, west of the highway, you're not doing not doing so terribly.
One of my recommended suburbs is that side of western side, which hasn't yet grown anywhere near as much as some of the others. So
interesting. Okay, and this is we kind of going back and forth on it. I thought that. Okay, so let's go back to where we were. Where were we? What were we talking about?
So we were talking about some of the drivers, and it's worth going to this economic forecast, because how it is now is one thing, but we want to look forward and see what's actually projected, and is this unemployment rate likely to continue over the next, 3-4 years, and what are they predicting for population growth too? So that all looks, very healthy. They were only budgeting for this financial year to have 3.75, and we're at 3.4, so we're doing under that, and they're predicting that to maintain over the next 2-3 years, which is going to keep, people seeking out jobs here. And that's indicated as well by their expected population growth, starting to increase more as well.
It is. Is population growth the largest in Australia? Am I right in thinking that?
Well, the next slide is worth rounding out our chat on drivers, because what is really key as well is when you've got population growth, they have to live somewhere, don't they? And this was put together by Michael Matusik, very interesting, and he only just released this quite recently. So it's looking at the expected population growth based on current numbers and projections for each of the capitals. Then the housing demand as a result. So he works out based on this many people coming, if there was, 1.9 to 2.1 people per dwelling, what does that equate to? And then he's looking at what's the dwelling approvals, like the supply in the pipeline, and then looking at the supply status and how many months of supply that actually is based on the population that's expected to come in, that we're already seeing come in. So this is what gives me a lot of confidence when I look at Perth compared to the other capitals. We've got just 2 months of supply to cater for this, ever-growing population. And our population is expected to be at 81 odd thousand, similar to Sydney and Melbourne and Brisbane there. When you look at Brisbane being 95, Melbourne 88,000, and Sydney's 86,000. So, but the difference is Sydney's got an oversupply of 18 months.
You know what that is? That's all those bloody Legoland places that they're building. So units in Sydney might be a little bit or new units. So building,
and as you say, it's definitely housing type dependent and area dependent. So, and scary for Melbourne there too, 25 months of supply. There's going to be some pain.
South Bank,
real pain ahead.
Building them to the sky.
And with this, sorry, I lost my question.
Things are tight. There's nowhere for people to live, and that's going to underpin prices and keep demand on both rentals and established properties, because they can't build them fast enough. And I think the biggest reason we're going to struggle to cater for this supply as well, but that the numbers doesn't tell you, is that because we were down for so long, the construction industry all scaled back to that lower level of demand.
And it takes a couple of years for it to ramp up.
That's what my next question was going to be around cost and prices for building new properties. What does that kind of look like?
I mean, anecdotally from chatting to all the builders that I know, we're seeing 30 to 40% increase in the previous cost. And that has to flow through to established properties. And it's another big reason why people are going to prefer to buy established over building the new, because, the premium is just too great on new at the moment still.
And
I don't think when the supply chains open up that they're really going to decrease their prices. Do you?
Oh, they're definitely not. No. Prices
give someone a raise, lower a raise.
I don't see deflation. I just see probably maybe less inflation in that sort of stuff. This should just to highlight probably some points, and interesting. This is maybe a free for all, Joe and Jarrad. In terms of looking at your Hobart and Darwin, whilst that number looks impressive, 2 and 0, I would sort of say there's a low number. There's no low number of population growth in both Hobart and Darwin. and even Canberra as well, whilst that it looks like a massive oversupply, I think that's a lot of units in Canberra. So I think it's the devil really is in the detail. So it's kind of, but I tend to agree with Perth and even Adelaide and Brisbane. There's just doesn't seem to be a lot of supply and a lot of, for the size of Adelaide is and the size of Brisbane is, a lot of demand coming in. So, but yeah.
And you'd think that's going to underpin Brisbane, quite well. Just
I think Brisbane's starting to get a little bit unaffordable in pockets.
Yeah, it is.
But what do you think? Yeah, which throws even more to WA or Perth.
Super interesting. Okay, well, this has been foundational to understand Perth a little bit. I think it's given people a good bit of a insight. Maybe it'll be worthwhile to jump into some of the micro drivers now and kind of explaining some of the recent sales numbers, looking at the supply and seeing what all of this stuff means. So yeah, let's jump into that. Before we do, we're just going to jump to our next ad, and then we'll dive right in.
It's been epic so far.
Commercial property offers the highest cash flow in Australian property investing, offering exceptionally higher yields than residential. Now, we're talking 8 to 10% net yields. That's cash after all expenses, not this 2 to 6% gross that we see in the residential space. So for those that are starting out on their commercial investing journey, it can be exciting, but it's also a step not to be taken lightly. The expertise of a commercial buyer's agent can pay dividends to help you secure that high cash flow and high growth potential property. And this is why we recommend Steve Polisi of Polisi Property. With over 6 years experience in the space, Steve has over 1,200 property transactions under his belt. He has seen it all and knows the best locations right for growth. In a previous life, Steve was a chartered mechanical and structural engineer, so he draws on his mathematical and analytical skills that he's developed to break down what works best in commercial property. As with engineering, same goes with commercial property. It's based primarily on the numbers. So if you're curious about diversifying into commercial property, you have access to $100,000 in cash or in equity, book a call with Steve today and find that perfect asset for you.
We are back. Good old commercial. I see Polisi buying a few commercials over in WA as well. He seems to like it over there. They're talking about the data deep dive that we did. It was Rockingham, Joe, wasn't it? It wasn't. Some people said, it was Rockingham.
Yeah, I'm fairly sure we did the data deep dive on Rockingham. But yeah, I wanted to ask the question.
I did Cooling Up. So we did two suburbs. The showdown. So we did two suburbs.
Yes.
Oh.
Good old. I wasn't convinced on Calling Up. But...
Might just see if one of them's in my top suburbs later, eh? Hang in there.
Calling Up won't be. It might be in your dad's suburbs. But,
It's definitely not. Baldivis didn't make the list, unfortunately, for all Baldivis.
I'm going to be upset if any of our clients are listening to this and they've just bought their live and learn.
Very influential. Yeah. Oh, geez.
It's like when very kind comment to make, but no pressure on this next bit. But yeah, it's like when someone has a kid. Oh, isn't my kid beautiful? No, it's not. But you don't tell them that. Because they've already got it.
Kids are beautiful, don't we? You look back and see some photos of when they're babies, and you're like, no, they weren't actually that cute. Were they?
Like potatoes.
Well, let's dive into some of the micro data points. Now, one thing to note on this data that we're going to go through, it's so crucially important. Like, it's important to look at it from an overall, like, what is Perth? But it's so different when you start to break down the suburbs. So look at the data that we're chatting about here, but break it down into suburbs. So break it into the suburbs that you actually, you know what, just grab all the data for those top 10 suburbs that Jarrad's going to talk to and see what compares and what works. And then look at the top 10 bottom spots, the crappy areas, and then compare those and see, actually, I can see the trends, because this is how you're going to understand data a little bit more, is by doing the comparisons between what's hot and what's not.
Is this the SA3 level that we're going to be looking at? Or anyway,
this is for Perth, the whole of Perth.
Okay.
Let me just go up to the top. The whole of Perth. Perth sales market. Is that you?
That's my sister.
No.
Under offer, family
Is
stock.
that something you bought? I mean,
No.
is that
No,
yours?
we also
Yeah.
sell properties as well. So I've sold in 160 odd suburbs, and that's why I also
Oh, that's you
have
there.
the
Oh, cool.
perspective of both sides. Yeah, look, no grey
Looking
hairs
trim
either.
in this live session.
Yeah.
I must say.
Love it.
Looking
Okay.
younger.
So yeah,
What are we doing?
Take a look at this. So understanding the underlying supply is pretty key to knowing what shape our market's in.
Wow.
And you can see we hit a record 17 odd thousand properties on the market for sale in April of 2019.
Yeah.
So
That's when people were really
scary.
trying to get out. They just had enough.
So that would have been the very best time to buy. But you never know until you get back around.
But it wasn't. It was all kind of. It's kind of trending along, wasn't it? Though, like this is a pretty that fluctuation isn't massive, so you would feel pretty comfortable to look at this chart. Yeah, that it is going to continue on going.
What's notable is we're at very close, if not at our lowest level of supply since I've been keeping data. So this is Reba's data, but as long as I've been producing this. And then we look at the demand side. You've jumped into
just before. So number for sale. Like, why is this an important number? Like, what do we use? What does it kind of tell us?
Well, I love looking at it on a Perth Metro, and as you say, I look at it at individual suburb levels as well. And why is it important? Well, it just comes down to when there's the whole relationship between supply and demand. So if we have heaps of supply and not much demand, prices are going to drop. Vendors will have to discount their properties to find the market, and that causes prices to drop. So you always want to see a tight or decreasing supply. And I don't know if we can get much lower than where we're at now. We've got a really tight supply, is what this is telling you, and we're 3% less than what we had at the same time last year.
Do you get this de-aggregated based on the suburb or region?
I don't look at it that. I tend to look at the whole of Perth, and then I look at individual suburbs. I don't look at really SA3s or regions. I don't find that to be as useful to play with.
Okay, because it could jump from month to month. It's not not really meaningful or as meaningful.
And when you look down at the next slide of the other side to that equation, we've chatted through supply, and I want to rip through these because we don't need to spend too much time, and then we can start getting deeper into some more specifics down at the suburb level. But this is top level. So number being sold, like we're maintaining a pretty high level at around 950 to 1,000 properties a week. And that's, certainly well above where we've been at in, all the period that we had of a downward market. So that level's still up there. That spike that you see is when we had those crazy building grants fueling land sales. And so then we sort of drifted back down to a new norm and went more or less trending sideways at this very good level. And we're 14% higher than the same time last year. Yep. So I'm very happy with how many people are buying, and regardless of all this bad media, all the bad headlines, the demand is still there. That's what's worth noting. When we go to the next one, sale inventory, I love this sale inventory because it gives you a feel for how much supply relative to demand there is. We've got 2 months of inventory, so all the properties on the market would be sold and bought out in 2 months. And that's a really good feel for how much you've got in the cupboard.
Yes. I imagine a big spike in around March 2020 was, we all know, the C9 COVID-19. That's, people must have not been buying, and there was still sort of not selling.
Yep.
Hard to get finance.
But sales inventory, super important because it is the balance between the supply and the demand, and then kind of drills it down to a number, which is super interesting. And you would start to see this chart is very
a lot more valuable when you start to compare it in like a Baldivis that has nothing but land supply and can keep growing. Whereas you'll look at something like Fremantle, for instance, where you can't build anymore. So the supply is going to get very, very tight, which is going to push the prices and the pressure up.
That's what's been happening to our median house price. And it started to flatten a little bit. This is by quarter. So that's to June. And
really didn't do much over the 3 years to June 2020 or even June.
Not much at the median level, no. And then you drop down to units, and units, this is why I generally say to people, like, if you're going to come to Perth and invest, I think stay out of units. We view units very differently to how you might in Sydney and or Melbourne. So the unit market seems to be already like coming off. Traditionally, what's happened in the past is migrants have fueled our unit demand strongly. So when they come to Perth, they are used to the higher density living and they want to be close to the city, and they often push up units, but it's very volatile. So it doesn't take much to put a new building up and overtip the supply to demand and easily create that more higher density. And we just preferentially don't want to live in it. So,
yeah. Okay. What do we got here?
You can skip past the land, like, so this is very important, and this is median selling days or average selling days. And it shows how quickly stock is turning over. And it's basically showing here that stuff's selling really fast still. And 18 days is our current average time to sell a property, which is just over 2 weeks.
So what I find interesting is your listings have really significantly compressed down from sort of 15K. I'd be interested to, like, what would drive up listings to, or would that sort of take some pressure off the selling days? It probably would, I imagine.
Yeah, it would. Definitely does. There's more.
So, but is this houses and units together?
No, it's houses. Yeah. I care more about houses, and I mainly speak to that because here
that's where the value
is so
is.
Disproportionate.
Yeah.
Interesting.
Yeah. Okay. So the listing volumes are dropping. The days on markets are dropping, which is a good sign for price growth. But we haven't yet seen that.
You haven't seen it shoot crazy at the overall Perth level, but you'll certainly see soon that many suburbs have already been doing that.
Okay, I've seen.
Now this is the rental market. Bit of a snapshot of what where all the properties that we manage, but
where all the properties are. Looks like your map has
a lot of properties
just everywhere. We've got 900 odd managements now, so
wow.
Very grateful for our clients. So number for rent, and this is like the lowest that I've ever seen in my 14 years of being in business, and it's 26% less than a year ago. So this is what's going to really underpin rental prices continuing to increase. And people, when they move to the state as a migrant, they often rent first for 2 or 3 years. Many of them, they work out where they want to live, and then they flow into the housing market from there. So the pain for tenants here, unfortunately, is not going to get any better. And it's pretty rough for a tenant when you just want to move house and you can't. So I feel for them because it's crazy levels. But the good news for investors is that pressure is going to be on rental prices continuing to increase, and it's pretty much across the board here, like that.
And what does it look like? So for instance, I buying, and I will buy a property, and it will be currently listed for $460 a week, and the tenant moves out in 2 months. They've been on that for a year. and we can bump the rent up to like 550. In Brisbane, for instance, like last year, we were seeing $150 rental raises. So I know the difference between an average property manager, because an average property manager will just say, oh, it's fine. It's at 460. We'll just leave it at 460 because we just want to keep the car.
Or whatever.
Yeah, we'll give it up by $10.
Yeah.
So what kind of prices?
I don't know. Average, that'd be a rubbish property manager. Why would they be saying they increase it by $10?
Well, you'd be surprised, Jeff. Like,
No,
basic
it's
stuff.
hard.
It makes their job harder,
I
I
don't
suppose.
think like an investor, like I can relate. Pretty inexperienced. They don't have properties themselves. Yeah. So some of the techniques we use like a from pricing. So that is mainly used on the sales side, hadn't really been used by anyone on the rental side. And we use that on a lot of our properties. And when a tenant submits an application, and we encourage them, if they want to put their best foot forward, it can certainly help to pay a bit extra. And we treat it very much like a sale. So when we're getting that extra amount from one person, we go to the others and say, just letting you know, we've had other applications that are higher than the asking rent. If you want to have the best chance, would you want to increase your application? It's completely up to you.
And how often is that happening?
Oh, on virtually every rental.
That's crazy. Yeah.
By how much?
It varies depending on the suburb. Even still, like
the good ones. The good ones.
Like we are pushing the bounds every time. So it might be $80 to $100 more than what we last rented it for, and then even then, sometimes that's not enough. We go to do the first viewing. We have to cap our viewing numbers because we just get too many people coming. So we sometimes, if we put it out there and we get too many inquiries, we'll adjust price before we even do a viewing. So we'll notify everyone, due to the high level of interest, we're adjusting the price before the first viewing. Please be aware and attend if you see value at this. So these are the things that you can do to improve the return that, the average PM wouldn't.
Yeah. Okay. And I guess this is to your point that we've got here, the rental vacancies. Yeah. And they've been dropping since, this has happened across a lot of Australia, but we're still down. We're still quite far down here.
Yeah.
Cool. Okay. Let's, so rental. So these are very good signs from a rental perspective. The number of rentals available is dropping massively. The vacancy rates is sustained low. The prices are starting to rise drastically from, what was it, 450 to 500?
350 at our lowest.
350 at the lowest.
We've surpassed our previous high now. So we were 480 was our previous high, and we're at 500 now. And
it looks like it. And this is the beauty of all the way back up at this other slide about affordability for the suburb. People can afford, based on how many people are employed and how much money that they've got, they can afford to spend more money on their property. So when I'm looking at these type of data metrics to say, oh, the average rent in this area is $500, this is where I'm jumping on a phone to a property manager like you and saying, well, yeah, the median is 500, but is it actually 550? Can I get 550? Because that's the difference between 5% yield or a 6% yield for me. So is it actually possible? And then again, inventory levels seem pretty sustained, but dropped over the past couple of years. But we've gone pretty deep on the rental side of things, so I just kind of cautious.
Too deep,
Joe.
well. Get onto the suburbs, mate.
Come on. Predictions.
Got to get Jarrad. Yeah.
Oh, do we all want to see the predictions? Is that what we're here for?
No,
we want to know where to buy in Western Australia.
I saw a spike in. Yeah, I'm keen.
Okay, we are back. We're going to talk about the hot spots and the not spots. What are we going to cover off first, Jarrad? What are we going to dive into first? The hot spots?
I want to paint a picture on the next slide about what has actually happened for growth over the last 12 months. Because, listening to a lot of what we've said, you might think, oh, nothing in Perth has really done anything. But here's a breakdown, and I just put all this data together today. I was crunching numbers and stuck in spreadsheets. But
Wow.
of the 76 Perth metro suburbs, you can see a breakdown here as to what growth there's been over the last 12 months to June. And REIWA's only published data to June, so that's why I haven't done to September yet. But you can see here pretty healthy growth among a huge number of suburbs. So 6 to 10%, 68 suburbs have grown by 6 to 10%. 88 suburbs have grown by 10 to 15% in the last 12 months. 43 suburbs between 15 and 20%, and we've had 10 suburbs grow by over 25%. Here's those 10 suburbs on the right. So
Wow.
What this is also showing us with those suburbs is the majority of them are all higher price western suburbs or direct coastal, and that's where the majority of the action's been. And in the case of Hillman and Kungamia, you always have to look deeper as to, like, is this change like actually reflective, and is it? You can see that in the 5 years they've only done 17%, but they've grown in 1 year 31%.
Yeah, whereas
So,
the rest, except Leaderville.
Yeah, like it's had a catch up, but it's still a crap suburb, like. So don't just go chasing, where you see strong change in median house price over 1 year. Like that doesn't.
What's going on in Guelph, North Beach, and Marmion? Because I can see that they've all far exceeded. Well, not far exceeded, but they've close to exceeded their 5 year as well.
Yeah, just they're premium suburbs on the direct coast, and lovely aspirational places to live, and people have just got the money and they're driving up prices in there.
And this is what we're talking about when it comes to the supply and demand of these type of suburbs, where people have no choice. If you want to live in these super nice pockets, you've got to spend more. So do you see more opportunity in Perth? Like, there's a question. Is there a better price point to buy in at Perth? Like that 335 price point might not be the best place to be going. If I've got 300,000, do I go to Perth, or what are your thoughts around the price point entry for an investor?
Well, that's a good cue up for the next slide, because the 3 months to June data is showing that the growth is moving down in the price points. So when you look in here, it's more now sort of getting in that 450 to 700 sort of bracket more so. So this is the 3 month change in some of these suburbs have done that in 3 months, and you take them with a grain of salt. And also, when I was preparing this data, I removed any suburbs that had low sales volume too, because you can't, the median price is not going to be an accurate change. So North Beach is still in there, and Marmion's still in there. They're still rocketing on over the last 3 months. But then we've got some of these more, average family type suburbs like the Edgewaters, the Warwicks, the Careen, which is upper sort of working class, Bennett Springs and Shelley. So it's starting to drift down into the middle price points now, is where the action's moving. So where would I be buying if I had an unlimited budget? Well, it all depends on your strategy, of course. So that's a open-ended question. But there's really good value still at, 500 to 700. You can get an amazing property here for that. If you go down in price points, you can still pick up something reasonable in sort of 450 to 500 here.
Mm-hmm.
If you're really starting out and just absolutely wanting to get into the market, then there's options below that. And how many other capitals would still have options? But, I'd be trying to spend at least 500 to 700 if you want like a really good quality, property that's sought after by home buyers.
Yeah, and that can afford you a half decent asset that has also value add potential to it. Like you can buy a nice sized block of land that can be subdivided.
Yep.
Yeah.
Well,
okay. So we kind of covered a little bit of this, but that was just
yeah,
more
we
from a
jumped into
geographic
that previously.
standpoint. But any other things that you want to cover off on here?
No, I think we should get stuck into my crystal ball for the year ahead and my top 9 suburbs and then my no-go suburbs.
Oh, yes. Do people want to see that? If there's a lot of people watching, like if we probably only have time for 1 or 2 questions. So if you want to get your question in, I may just pick some of the ones that come in first. So let's talk to your crystal ball though. What do you sort of see? So we're talking about Perth here though, yeah?
Yeah.
Yep. I would imagine.
So I'm expecting rents to increase by at least another 10% over the next 12 months. So that should give people peace of mind that it's going to offset their increasing interest rates somewhat.
Particularly if you have Jarrad as your manager or Jarrad's team.
Well, yeah, definitely get in touch with us.
Okay.
Immigrants are being drawn back, and I suspect that the actual population predictions for someone like Machuzik might actually be underdone. So I've done some really interesting deep dives on my podcast with a migration agent that Mark McGowan's been very smart about his migration policies, and that's what is actually tipping the population in favour of Perth. So we're classed as a regional centre. So we have a lot more flexibility with like who we can bring in and the type of, skilled labour and other things. It makes it easier for someone to get into Perth compared to any other capital city because we're classed as a regional centre. And then he has a number of other policies that are really, I've said polices there, it's policies. But check out my episode, Perth Property Insider, episode 83, if you do want to go deep dive into that. But that's going to be really key to this immigration piece. I'm seeing a lot more investors, when we're chatting to them, they were looking in Brisbane, were looking in Adelaide, and some of them are now just moving to Perth and not continuing to look in those spots. And why? Because what you can get here for your money and the relative rental yield is very attractive. And there's those, I think we've got very good growth prospects for the next 3 years. And when I look at our fundamentals, I'm not across all the other capitals anywhere near as deep as I am Perth, but you have to, I don't think people
So
can
you
argue
caveated your statement here. The most solid fundamentals of any capital city, but exactly. I don't know about the other capital cities.
What I know is unemployment-wise and, average income-wise and our projections moving forward, they're solid. So I'll let everyone else go and do their research on the other capitals. Here's Perth. So, I'm still expecting 5 to 10% growth for the inner and desirable areas and at least 10% growth for most outer areas. And it's flowing down to those middle to lower price points now. So you've always got that sort of trade-off of you'll get better shorter-term gains in the middle to lower, but it's still pretty decent value buying in premium areas, like if I told you some of the price points that you can still get into, you can get into Mount Hawthorn, say, for $1.5 million. If you look at where that is, go and put that in any other capital city and you'd be at $3 million for what it is.
Probably.
So we've got clients that are at all ranges of that spectrum, and I'm not sort of biased to anything. It depends on your strategy and your budget and, what you want to actually achieve for yourself. So
here's a bit of a question that comes up, and I imagine this comes up all the time. My fear is
we covered this off, Brian. He wasn't watching the whole show.
He wasn't watching. But I think that one thing that you can do to mitigate this, and this is like, so I am buying in Perth. I see great opportunity there. But what you can do to mitigate some of these risks, because we no one can predict capital growth. You can look at the data and see what are the key drivers of data, what are the key drivers of capital growth previously, and look at sales volumes, listing volumes, and see how things have moved up and how things have moved down. Look at it from a macro perspective, and you can go on. Kind of like what we have covered off in this. But you can also do things yourself when you purchase a property that has value add potential. So for me, I'm not buying anything in Perth that can't be subdivided. So if I can buy a property for $500,000 and build another property at the back of it, which will allow me to subdivide and split, I can then put another house on there and then have two houses worth $500,000. And if you're able to push up $1 million, if you can add value, I think that's where you can ride that wave.
Yeah. The other thing you can do when you're looking at a specific property is, you know how we talked about the average annual growth rates for all the capitals and compared that? What I do is I look back at what is this property sold for exactly as far back as we can find. So if you, and I then go and calculate the actual average annual growth rate for that specific property. So you can find an outperforming property in, you know, if you can choose your suburb and choose an outperforming suburb or that's likely to, and then find an outperforming property within that suburb, you're going to tilt the odds in your favor. If you then stack a subdivision or development potential on top of that as well, and you look back at, you know, how has this suburb's median gone in the past too? Did it tank and go, you know, down the toilet when Perth had its, you know, its
lost years,
bust or its supposed bust? Not every suburb, every property lost value during that period either. So if you're selecting the right property, it's going to be much more insulated and it's going to continue to grow and rent. And, you know, that's what I would be doing.
I want to see the top 9. Can we do it?
Yeah, I want to see the top 9 just real quick because I know Jeff is going to lose his stuff. But we have.
I just like I know Jarrad's actually.
We have the Deal Crunch calculator where we calculated that for you. So if you go on to so this is the property that I purchased in WA. In June 2000. 13th of June 2000, it was 135,000. Current value, we purchased it for 541.23. That is a compounding growth of 6.4%.
Very healthy
capital growth. Very healthy capital growth.
And that's only going back to 2000 too. So, you know, if it went to 1990, you'd find that figure would be stronger.
Yeah. Yeah, so it's super useful to do that. And the reason I brought that up is you can calculate that within 2 minutes on our Deal Crunch, which you can download for free and blah blah blah. But anyway, let's go back to the top 9. That is what we're all here for. I have just been teasing it.
5 other. Yeah.
We haven't got time, Joe. I better duck off. Catch you later, guys.
Thank you for the show.
I'll get a lot of hate messages, I think, if I did that. So
yeah, let's do it. Okay, top 9 suburbs. Why 9 and not 10? That's my first question.
Well, what I did is I wasn't just going to give away all of my research that I spend, you know, copious amounts of time doing. I just wanted to give a little taste by price point. So I just went and looked at every sort of price point going upwards and found the best that my methodology is I look at 30 years of data compiled by REWA. So I had a study commissioned specially for me to compile this data and work out the average annual growth rates for every suburb over 30 years. And I haven't found this data online anywhere. It often only on the sites only goes back like 10 years. You might find somewhere that goes back 20 years and has a accurate data set. I managed to get my hands on 30-year data. And so I start with looking at how they've performed over as many cycles as possible and use that sort of evidence-based selection.
Wow.
And then what I do is I then overlay that longer-term, data, which is the history, with shorter-term I use some other tools like HTag, which you might have heard
Higher
of,
average growth, yeah.
and I use Suburbs Finder to look at the trends in each of the underlying stats, similar to what we've spoken about up there about trends in supply, average days on market, online search interest. And then I'm combining the best of longer term past performance. And yeah, it's no guarantee of future, but wouldn't you rather, if all the variables still exist in that suburb that's led it to be popular in the past, like the coast or that great school that's still there or the river, I would rather use evidence to choose the suburb than just blindly, throwing a dart against the board on realestate.com.
Yeah. So Medina is looking very interesting. 5.9% growth over the last 30 years.
Yeah.
And also is only 289,000.
Yeah.
And it's got a 6% yield.
Yeah. So look,
Yeah,
that's
I'm interested in Medina because that's that's one that's. I mean, Rockingham stands out a little bit as well, but I know Medina is quite close to Kowina. So I'm butchering the name of that, but
Kwinana.
Kwinana, yeah. I'm not a local,
Kwinana.
but yeah, what's the thesis behind Medina? Obviously, it looks at all those metrics, but what's the on the ground? What are you sort of seeing there with those?
And can you point out where some of these locations are? Because I feel like it gives a bit more clarity around.
Yeah.
Oh, okay. So that's. So where is Medina, for instance?
So Medina's down halfway to Rockingham. So go on the next slide down, and it's. So let that load for us. See Kwinana Town Centre there. It's right in there. So they've done 10 to 15 odd % in the last year, according to the chart, and that's where it is in there.
Okay. And what about some of the other hotspots?
So Heathridge is a north coastal one, which is really undervalued, I feel, still compared to its surrounding suburbs. So that's sort of just up, north of Hillary's. Just inner of up there. And Marangaroo's, we did mention Rockingham. I fully support Rockingham because what's happened with Rockingham is that see how it's had relative low growth on the legend there, and I'm predicting that as a ripple effect because long term it's had very good average annual growth rate, but it has not been the flavour of all these investors that are coming in, and now they're looking at it and seeing value, and I expect that that's going to do very well.
Definitely.
Canning Vale is out here, and you can see that that's lighter blue too. So it hasn't, relatively speaking, look at all the suburbs around it. They've all done relatively well. Canning Vale's getting 2 new train stations. And
do people catch the train in Perth?
Yep.
Yeah, that was a question.
Yeah, they do. So that's really going to open that up transport-wise. And the other benefit of Canning Vale is it's got really good primary schools. So that's going to underpin the home buyer appeal in there.
The one that interests me, though, is you got next door, you got Gosnells, which has done well, but there's a purple suburb in there. What's that purple patch? Next to Rodney Selgrove as well.
Oakford has a lot of land there.
Okay.
I think next to Selgrove, that's probably Camillo, which has got a really bad stigma attached to it. So, I always we have a joke around in the office. If someone's going into Camillo, we don't manage, I probably only manage 1 or 2 properties there reluctantly. For owners that have got portfolios, and we've agreed to take it because they've got better properties in other areas. We tell people when we're going into Camillo in case we don't come out.
Jeez,
it can get rough.
Buddy system.
Yep.
Check in, life check.
And
Okay. And
Civil
where's
Grove, similarly, Civil Grove and Marangaroo are just real good sort of blue collar. Civil Grove's out the way of towards it's just there. I feel like it's still relative value compared to its longer term growth rate, and I'd certainly be buying in there compared to Camillo or Gosnells or Armidale. That would be my pick out that way.
Yeah, you hear a lot about Armidale. People bang on about Armidale.
Yeah, look, it's got a lot of Homes West and it's lower socioeconomic, so there's also a lot of land supply sort of still in there to be released.
Yeah.
Okay.
There you go.
So I love what you've done here, because this is like, if I had three. So what you're saying here is, if I had 300,000, I'd buy in.
Yeah.
Yeah. If I had 500,000, I'd be considering Marangaroo and Rockingham and Heathridge. If I had 700,000, I'd be going Caning, Scarborough. What about Fremantle? Did that make
Fremantle's
the list, or
definitely in there, but it's higher priced. I think. Yeah.
Okay.
And
Here we go.
I really love Mount Hawthorn because it's got there's a relatively new public high school called Bob Hawke, and it's brand new in Subiaco, and it's very popular and driving prices in Mount Hawthorn, Wembley, and Subiaco. So that's why I'm particularly in favour of Mount Hawthorn as a suburb. It's got cafe strips, lovely spot.
The higher income.
Yep. That's where the money goes. Any other things to mention on this data side of things?
In harder times, like you'd more focus on like rental vacancy rates and like which way that's trending, but in the whole of Perth, that's going the right way at the moment. But I have a elephant memory where I can think back to how was an area. So I try to.
And this gets to your point on your no-go zones. So let's cover it. So you've got top 7 no-go zones. And what's this saying? What are you saying here? Top 7. What
I'm saying is, and I've probably touched on this throughout, that high density here, I would not be buying in the CBD, West Perth, East Perth. Stay out of high density apartments. I don't know what your ideas are, but it's a bad idea for Perth. When it comes to land supply, so many investors are buying in these suburbs, and I just wouldn't be. I'm sorry if you bought there, Joe.
No, I haven't bought there. Hell no.
I think that's true for a lot of capital cities. I mean, it's like Sydney's got it. Sydney's got it with your sort of Green Square, and you've got sort of the Opal Towers. Like Melbourne's got it. Even Brisbane with even Adelaide's got it. Even I'm sure Darwin's got it. The high rises that are just like, and their properties are selling them for what they bought them 10, 15 years ago.
Yeah.
But I think it's the asset type for the area, right? Like Bondi, buying a unit in Bondi makes sense. Yeah. Perfect sense. Buying a unit in Cronulla,
sort of
perfect
units
sense.
in Bondi there.
Exactly right. So it's like buying a unit that can just keep going up and up in the CBD is not going to give you that diversity. Well, maybe we should put this disclaimer up right now. You haven't mentioned Oz property investors on that.
No, sorry guys, but we'll throw your name in as well.
Yeah, I was going to make the cut.
We got the cop, Joe.
I've only obviously included one suburb, but I've got like a buyer's info pack, and we can also do specific reviews of properties and a bit of an inspection service for people if they're remote and they can't, get through and inspect properties. So that's just really things we have in place to help people do it remotely.
Yeah, and I think that's one of the biggest challenges for an East, for us as investors, is we don't know anyone on the ground. We don't know anything about the areas. It's just Perth is west, and it's kind of big and bad and scary. But having someone, an amazing property manager that is an investor focused, and I think that's very very ballsy of you to call your business Investor Edge and focus on helping investors, because it's so easy just to say, oh, I'll just take anyone on and I'm not going to focus on the core fundamentals of investors. But I guess it's working amazingly for you.
Well, I was frustrated when I started investing because I had 4 property managers and having to chase them up, and I had a vacant property and damage to another, and I was leaving messages for them unreturned, sending them emails, and God, that's what inspired me to start Investors Edge way back when. And I've got a communication guarantee, which is pretty crazy. And
I saw that.
Yeah,
$100 if you don't get back to people within one business day, or $200.
Yeah, $100 if we don't return your call or email on the same business day. So,
so have you ever just if somebody sent you an email and you're like, getting to the 23rd hour, you're just like, hello, I've replied.
Well, I have to be asking us.
I'll get to this.
Not,
Yeah, exactly. It's like
not
ordering
just
a
saying
pizza from very far away, Domino's. If it's not here in 30 minutes, it's a 35-minute drive.
And we work out, like, over the years, we've had the occasional person that keeps trying to sting us at 4:59 p.m. and we quickly work out we're probably not the right fit for working together. Just trying to make cash for next week on us.
So that has been an absolute fundamental data deep dive into the Perth property market, and thank you very much, Jarrad, for running through all of that stuff. It's been absolutely epic. So what is the best way for people to look at you, look at the results? Massive awards, a lot of client love, a lot of Google. 600 Google reviews is absurd. How can people get in touch with you? How can they learn more? And what kind of people do you want reaching out to you, I guess?
Probably, our website, investorsedge.com.au, is like the go-to for everything. But we've also got the podcast, Perth Property Insider. And a lot of people listen to that and engage in that and get in touch with us from there. So those two are the main ones. And we're always happy to give free rentability analysis and advice on the rent side. We'd rather do it before you buy, so you don't make a mistake.
Yeah.
So if I'm interested in Perth, what I'm going to do is jump off of this call. I'm going to jump onto your website and say, I'm going to do some data myself, and then reach out to you before I buy the property and say, hey, just looking at this thing, what do you think?
Yeah. And we've got quite a few little low cost ways we can give advice. We're not a buyer's agent, so we don't replace someone like Joe that's going to really, seek out and negotiate and do all that, heavy lifting. But we have the advisory service where we can tell people, is this going to be a good rental property? What's the price going to be? And then we can also do a specific review to say, do we think it stacks up? So,
yeah. Does it actually make sense at this price? Because I imagine you see prices that are like 600,000. You're like, no, it's 550. You should cut it off.
Because we've got the sales side as well. We've got that expertise to advise on price. And we've got something called a buyer's info pack. So I gave you one suburb. Like, when someone buys that buyer's info pack, I can give them 5 suburbs that match their budget. It's tailored to them. And we've got a few other tools in there. Like, I've got an ideal criteria that you can overlay over the top. So you match up your suburb, your area and your property, and screen the property that you're looking at to make sure it fits. Now, Joe would probably do a lot of this heavy lifting, but if someone wants to do it themselves a bit, then this is an option because we just saw too many people making mistakes and not doing adequate diligence. So through necessity, we've had to create these things.
Here we go.
So just go to investorsedge.com.au/invest for those buyers info packs and reviews and stuff.
Yeah, that's super, super interesting, and a great way to do it, because some people are confident to go out there and they've done the research and they're ready to action it, and they can do the negotiation, they can do the whole package themselves. But I would totally recommend just getting an expert's eye over the top of what you're doing, and making sure that
We charge so minimal for that as well. It's like $220 for our buyer's info pack, $220 for a review, and $110 for our inspection sort of services on, before you buy. So we don't want that to get in the way of, a
$500,000 deal when you
yeah, exactly.
grand undervalue.
People tell me all the time, you should put your prices up, but it's not our core focus. We're property management specialists, and
that wouldn't even pay for itself. The time wise invested. Awesome, Jarrad.
The serious people from those that are, getting us to just look at properties all day. Going back to your quote at the beginning, that action is what matters, not ideas, Jeff.
Yeah.
I think.
Yeah, it was me. Yep.
Love it. Look at that. Cheers. Was a good listen. Thank you very much, Jarrad. Everyone reach out to Jarrad, bombard his inbox, because you're going to learn some stuff. You're going to learn some stuff about WA, and I hope you have in this session. Anything else you wanted to mention, Jay?
No, just thanks for the opportunity, and love tuning into your guys' webinars and stuff. So,
and
good to get on here.
Looking forward to hearing how your session goes tomorrow night as well. We've
got John Lindemann over in Perth, so he's catching up with some of our clients and stuff, and we'll see how my suburb predictions compare to his, eh?
He's probably just copied and pasted yours.
Yeah. Well, I sent him my slides ahead of the time, so yeah.
Big mistake. Big mistake.
John.
Awesome. Amazing session. Let's do it. Thank you, Jarrad. See you later, guys. Let's go buy a property.